All right, guys, so now you're finally on season 3, Trading Plan Creation, the season that you've been waiting for this entire time, because in the previous seasons, everything that you've learned in season 1, Know Yourself, in season 2, Performance Review, we're going to take it all and put it together in season 3, Trading Plan Creation. This is what this is. So in this season, we're mainly going to be focusing on a few things. Number 1 is trading personalities. That's going to be a big lesson where I'm going to literally break down exactly the various trading personalities that we can utilize within the style of trading that we trade. So we're going to be looking at a day trader, an advanced day trader, a swing trader, an advanced swing trader, the hybrid personality between those two, because we can have a day trading hybrid and a day trading hybrid advanced, and also a swing trading hybrid and a swing trading hybrid advanced. So that's what we're going to be breaking down in this lesson. Mainly, we're going to be focusing on the trading personalities. And with that, I will also do a little of an additional topic, which I'll talk about risk and figuring out your risk profile. Are you in the neutral range? Are you a conservative trader, or are you an aggressive trader? And then we'll briefly also talk about some other trading styles, such as investing, active investing, and so on. But that's the first section of season 3, is actually figuring out the trading personalities, and that's what we're going to be looking at in this lesson in a lot of detail. Now, in the lesson coming up, Trading Plan Creation, that's literally when, once you find your trading personality, you know, I want to be a day trader, or I want to be a hybrid day trader, or I want to be a swing trader, period. Right? In the next lessons that are coming up, we're mainly going to take all that knowledge that we have gathered so far and the trading personality, and then make a very mechanical, structured plan around it all. Right? Literally taking away all discretion, all emotional trading, and actually making a plan where we know exactly where our targets are all the time, where our stop losses are, how we're going to be entering into those positions, which strategies we're going to be utilizing, how are we going to be analyzing our daily timeframes and management techniques and risk profiles and all of that stuff. So that's where we're going to be putting it all together in the next lesson that's coming up. So with that said, that is season 3 of Trading Blueprint. Trading Plan Creation is going to be a monster, and we're starting off right now with season 1, with lesson 1, trading personalities. Let's dig into it. All right, let's talk trading personalities. So in this lesson, we're going to be covering a few of them. We're going to be mainly focusing on day trading, swing trading, and the hybrid approach. However, within those 3 styles of trading, there's various personalities within that. So let's break it down even further. We have the day trading and an advanced day trading approach or personality. We have swing trading and an advanced swing trading personality. And then we have the hybrid, which we can have a day trading hybrid and a day trading hybrid advanced, a swing trading hybrid and a swing trading hybrid advanced. So those are the main personalities that we're going to be covering in this lesson. So there's going to be a lot of detail, and when we finish this lesson, you should have kind of an understanding of which personality you personally prefer based on your style of trading. Now, within this lesson at the end, we're also going to be covering a few different things, such as the risk profile, which is extremely important. What kind of trader are you from a risk point of view? And we're going to be looking at neutral, conservative, and aggressive, and what do they actually mean? And then we'll finish off with a little bit of investing. So that's this lesson, trading personality. So personality number 1, the day trader personality. Let's have a look at that. So to break down the day trader personality, we have to understand a few things. We have to understand the style of trading that a day trader would do. So with that said, let's hit the charts. And when we look at the charts here, what we have are the higher time frames. So again, we have the monthly, the weekly, and the daily on the bottom, right? So as a day trader, when it comes to time frames, monthly and the weekly are not really necessary, because from a day trading point of view, as a short-term day trader, whether you're a normal day trader or an advanced day trader, which we'll chat about next, from a day trading point of view, you mainly want to be catching the daily momentum. the immediate short-term daily momentum. So pretty much what you gotta ask yourself is, what do I believe the daily chart is going to do over the next few days? Period. That's it, right? So that's where we go further into our analysis. So with that said, we can, in general, have a look at this weekly chart, and we can see that the weekly chart overall is bearish. We just rejected that weekly 50 EMA, and we broke the weekly phase line, and now we're coming back to retest that phase line on a daily chart. So that's the weekly chart, overall bearish. Now on a daily time frame, when we go into this into a little bit more detail, what we find is that we have this inverse or continuation head and shoulder pattern. Left shoulder, head, right shoulder, slanted neckline, which is the daily 50 EMA, and then we have that breakdown, right? So this looks like a continuation head and shoulder pattern, and the bearish trend is beginning. But what we're looking at here is mainly this pullback, right? So I'm treating this as a pullback play. We have a beautiful support level with 1, 2, this is the third major rejection. We have a couple of rejections here as well. But these rejections are extremely good. We have good candlestick reversal off of every single one, right? So in this case right here, we have a tweezer bottom and this bullish candlestick, right? So it looks like the momentum, the short-term momentum is obviously bullish as it's bouncing off of this support level. But we got to remember it's a pullback play, right? Overall, the daily trend is bearish, the weekly trend is bearish as well. So this is playing over against the overall daily momentum, but it's with the short-term bias, right? We believe that over the next few days, this is going to go up because of this beautiful rejection here at the bottoms, right? So that's our higher time frame analysis. So as a day trader, we know where the bias is. We mainly want to figure out where is this bias from a short-term point of view. Where is the short-term momentum? Where is the short-term bias? Is it short-term bullish or short-term bearish? So in this case, it's short-term bullish. So with that said, let's go a little bit farther into the actual lower time frame. So now we know it's a pullback. Now from a lower time frame point of view, this is again 4-hour top left, 1 hour on the bottom, and I have the 15-minute on the top right. You can obviously have a 5-minute on there as well. I just have the 15-minute just because of less candles. 5-minute chart, there's literally a lot of data. So for the purposes of this lesson, I just switched it to the 15-minute chart. But either way, we're mainly focusing on the 4-hour and the 1-hour chart here, right? So as a day trader, again, daily, 4-hour, 1 hour. They're going to be some of the most powerful time frames for you to utilize. So from a lower time frame point of view, this is a traditional IBO strategy from the Trading MasterClass lessons, right? We have this wave 1 breakout, wave 2 pullback to retest the 1 hour 50, 1 hour 0.3 to Fibonacci, and we're catching the wave 3 run. Okay, it's important. This is important. That's why I teach the Elliott wave theory within MasterClass, because in this case, the IBO, we're catching that wave 3 run. So to explain it further, we also know within the Trading MasterClass lesson, what are the most optimal targets for the specific waves, whether it's a wave 1 or wave 3 or wave 5. What are the target levels? So that's where we use Fibonacci extension for that, right? Fibonacci retracement, we measure the pullback. Fibonacci extension, we measure the run. So wave 3 run has a few different targets. 0.618 is obviously the first target. It's the easiest to hit. It's extremely important to know that. 0.618, first target, it is the easiest to hit on a wave 3 run. Then we have 1.272. To me, that is the most optimal target for a wave 3 run. I find that this target is hit a lot of the times, right? And then we have 1.618, which is the maximum target for a wave 3 run. A lot of times it typically ends there and it starts to turn around. So we know the safest, 0.618, we know the optimal, 1.272, and we know the maximum, 1.618. Now, how does a day trader approach this? So a normal day trader, the initial day trading personality, should be going kind of easy on pullbacks, meaning that on a pullback play, they're always utilizing the safest target. Doesn't matter which strategy. This is simply one example of one strategy, the IBO, the initial breakout. But from a pullback approach, it's a pullback on a daily chart, right? So when it's a pullback on a daily chart, a day trader will simply utilize always the safest approach, the safest target. Why? Because you're trading against the overall bias, right? Against the daily trend, against the higher time frames, right? So you want to have the easiest target to hit so you can get out of the position for profit and move on. Simple as that. And then catch the run on the way down, right? So from a day trading point of view, when it's the pullback, right, you're looking to go nice and easy, nice and safe. So in this case, for an IBO, what's the safest target? 0.618 Fibonacci and the 4-hour 50 EMA, roughly this area. So you can go enter at 0.382, have your stop loss at 0.75, and target 0.618 for roughly a 1.4% reward to risk ratio, right? So that's how a normal day trader approaches a pullback, right? Now, every single other strategy, whether it's the ABO or the IBO in this case, or a CBO or the ACB, also has its safest target, right? So whenever you're taking that pullback play, right, as a day trader, you're always utilizing that safest target, such as in this example. Now, what if it's a run, right? What if it's a run? So let's just, when we look at the charts again and look at the higher time frames, let's assume this is a run. Obviously it's a pullback, but let's just assume this is a run just for example purposes, right? So how does this differ now? How does this approach differ from a pullback to a run? Well, we know that an IBO on the 1-hour time frame is a wave 1 breakout, wave 2 run, or wave 2 pullback, and a wave 3 run. Okay, so that's the IBO strategy that we traded. We're catching the wave 3 run. So we also know the optimal targets for a wave 3 run, 1.272, and we know the maximum target for a wave 3 run, 1.618. It doesn't matter whether it's a wave 3 on a 1-hour chart or wave 3 on a daily time frame, the target levels are the same, right, based on Fibonacci extension. So with that said, safest target on a pullback, you're targeting 0.618, right? You're utilizing the safest target. Well, if it's a run instead, then you're looking to either choose 1.272 if you want to be utilizing the most optimal, or if you want to stretch this to its full potential, 1.618 would be the target that you would be utilizing, right? For a total of about 4-to-1 reward risk ratio, 4% profit. That's the day trader personality, right? So to summarize it real quick, the normal day trader, not the advanced, we'll have a look at that in a second, but the normal day trader personality on a pullback play, right? When it's a pullback play on a daily chart, when it's a daily pullback, right? We're mainly looking at that short-term momentum. So a short-term bias is that it's a pullback for the next few days, meaning that we want to have a quick short-term approach because at some point it will turn around and continue going down, as an example. It will start its run on a daily time frame. So from a pullback approach, a day trader should be utilizing safe targets, the targets that are easiest to hit, right? The benefit of that is it's an easy target. It's the easiest target to hit, right? And another benefit is that because it's the easiest target to hit, you will maintain a really high strike rate. It's where you push those targets every single time is where your strike rate could get worse. But if you always utilize a safest target, the target that is easiest to hit, right, you can maintain a really high strike rate. Those are the benefits of this day trading approach. So when a pullback, you simply use the safest target because it's the easiest to hit, and you know that at some point this momentum will die down and price action on a daily chart will continue with the trend, right? But if it's a run, now we're with the daily trend, we're catching that daily run, right? This is where again we drop down to the lower time frames, and a day trader will be utilizing the target placement off of the 1-hour wave theory, right? So in this case, in this previous example that we just looked at, it was an IBO, and the safest target is 0.618, maximum target 1.618. So on a pullback, we target 0.618, and on a run, we target the maximum 1.618, right? And that's the day trader personality. It's simple, it's mechanical, and you can utilize the same approach for the ABO strategy, for the IBO strategy, which this example was, for the CBO strategy, for the ACB strategy. Simply on a pullback, utilize the safest target because it's the easiest to hit. You'll maintain a high strike rate. And on a run, You'll be utilizing the maximum or the most optimal target because you want to take advantage of that daily momentum. So that is the day trading personality. Now, let's have a look at the advanced day trader and how is it different. All right, so the advanced day trader personality, it's very similar to obviously a typical normal day trader. It's just a little bit more advanced, right? So there's a little bit of a spin to it. It's a little bit different, but the same at the same time. So the one thing to note again with an advanced day trader personality is it's a little bit more involved, right? There is a management approach to it because of the target placement. This is where it differs. The target placement on pullbacks, right? That's where the advanced day trading personality differs from a normal traditional day trader that we would call a day trader, right? An advanced day trader personality differs on pullback plays. It's simply on a pullback where a normal day trader was utilizing a safe target approach, and on a run, they were either choosing the optimal or the maximum target. Where? Well, the difference from a day trader to an advanced day trader is that an advanced day trader, it doesn't matter whether it's a pullback or a run on a daily chart, right? It doesn't matter whether it's a pullback or a run. We just want to know that there's daily momentum, right? So we want to make sure the daily chart's still good, it has that rejection. And we just want to know there's daily momentum. An advanced day trader will have the same target every single time for the strategy, right? It doesn't matter whether it's a run or a pullback on a daily chart. So when we go back to that same example to explain it in a little bit more detail, when we look at this chart here, again, this is the IBO example from previously, and an advanced day trader, right? This is obviously a pullback play on a daily chart. So now it's a pullback play, right? So an advanced day trader, doesn't matter whether it's a pullback or a run on this daily time frame. So it doesn't matter whether we're catching the run or the pullback. When the lower time frame is a wave 3, like in this case an IBO, an advanced day trader every single time will be choosing either the most optimal target, 1.272, or the maximum target, 1.618, right? Why? Why does that make sense? Right? Because obviously the previous personality, if it's a pullback, we wanted to have that safe approach. Well, there's a benefit to the safe approach. It's an easy target to hit. We know we're trading against the overall trend, so it's nice to have an easy target that is easy to hit. Because of that, we'll have a very high strike rate. And we'll be banking profit pretty quickly as well as a normal day trader. So why is this okay to do for an advanced day trader? Well, the reason's simple, right? From a day trading point of view, what are we targeting? We want to know that the daily chart has momentum, right? So for the next few days that we're looking to play out that specific position. But what are we actually targeting as a day trader? We're targeting the 1 hour wave. So wave 1, wave 3, wave 5, right? Based on the strategies. The ABO strategy is wave 1. The IBO strategy in this case is wave 3 on a 1 hour chart. The CBO strategy would either be a wave 3 or a wave 5 run, and the ACB strategy is typically a wave 5 run on a 1 hour time frame, right? So an advanced day trader will always be utilizing either the most optimal or the maximum target per strategy. It doesn't matter if it's a pullback on a daily or a run on a daily, right? The benefit of that, just like there's a benefit of the safe approach, the benefit of the advanced approach is that every single time you're maximizing on profit, right? Because you're catching the maximum of that 1 hour run, right? In this case, in this example, again, it's a 1 hour wave 3. So we're looking to catch the maximum or the most optimal target, right? The benefit is the reward to risk ratio. 4-to-1 on a maximum target, roughly 3-to-1 on the optimal target, and roughly 1.4 on the safe target. So normal day trader banks about 1.4, and an advanced day trader either 3% or 4% depending on the target, right? So that's the benefit. The benefit is the reward to risk ratio. But the benefit was very similar to the normal day trader, because the day trader, the benefit was the target placement. It was a safe target. That's why we utilize 0.618, right? As an advanced day trader, the negative is that because we're pushing the target on a pullback, on a daily pullback, right? So it's obviously a wave 3 on a 1-hour chart. So we want to maximize it as an advanced day trader. But we have to understand what the negative is. The negative is that we're trading the daily pullback, meaning that we're going against the overall momentum, which in this case, the overall momentum is bearish. The daily trend is bearish. The weekly chart is bearish in the long run, right? So we're trading against that overall bearish momentum, and that is the negative. So an advanced day trader, what he can witness a lot of the times is that the target, the maximum target may not be reached. So if we go back to the chart here, so sometimes it might be hit because it's obviously a wave 3 run. 1.272, same thing. But 0.618 is the easiest to hit. So what does an advanced day trader do? What if it continues to go up and it doesn't hit the overall target because the price action starts to reverse because the overall higher time frame momentum is actually bearish? Short term, bullish, good for a quick move, but in the long term, it's bearish, right? So what if price action actually starts churning around, right? An advanced day trader needs to have a backup plan. This is why it's a little bit more advanced, because if that main target is not reached, at some point price action will churn around, and an advanced day trader will need to now manage this position properly, because it doesn't make sense for the price action to start heading down to stop you out for break even or minus 1% loss. We want to manage this position as it goes up. So an advanced day trader, when trading that pullback on a daily chart, but using a maximum target or the optimal target, right? Hopefully price action just continues to go up. But I'm going to say that a lot of the times it will not on a pullback. And at some point it will churn around. It might hit a 1.0. It might even stall at 0.618, reject that 4-hour 50, and continue further down. So an advanced day trader needs to have a little bit more of an active management approach. So what does that mean? It means that as price action is going up in your favor, you're taking your stop loss and you're removing that risk, right? So as it's sitting at 0.618 as an example, the normal day trader would have already banked profit, but an advanced day trader would still be sitting in the position. The last thing you would want is price action to reject this level and stop you out from 1% loss. So at some point you want to bulletproof your position, remove the risk. The negative is, hey, if it rejects this level, you might get stopped out for break even, or maybe 0.5% profit as an example. The benefit of a safe approach is that you would have banked 1.4, right? But if it continues to go higher and higher and higher and instead churn around at 1.0, well, now you're going to move your stop even farther. You're going to lock in that full 1.4%, right? So if it churns around early here at 1.0 and falls down, you'll bank 1.4. If it continues to go higher, you're going to take your stop loss and move it farther up, lock in 2% and lock in 3% until you finally get close for your target. Or if it churns around, again, your stop is going to be hit based on on the level where you put it. So as you see, an advanced day trader always utilizes the best or the maximum or the most optimal target for that 1-hour wave. 1-hour wave 1, 1-hour wave 3, as in this example, or 1-hour wave 5. An advanced day trader will be using the maximum or the most optimal target, whereas the normal day trader will be using the safest target. That's the difference, right? The benefit of it is that a lot of times you're going to be taking it for full profit, whereas a normal day trader would have only banked a fraction of it. The negative is sometimes actually the day trader might actually make more profit than the advanced day trader, because price action will reject that safe level and fall further down and stop out that advanced day trader for break even, as an example, whereas the other approach would have made for 1.4%. So this is where consistency comes in, right? You choose whichever style you prefer, right? If you prefer the advanced day trader, just know that that's the positive. There's also a negative to it. and you have to be a little bit more active with your management as price action is heading in your way, right? And the beauty is in consistency, because both of those approaches have their good, have their positives, and have their negatives, right? But they're both very, very, very good, right? One's a little bit more active, one's a little bit more passive because of the safe target, right? So that's what you got to figure out. If you want to be a day trader, you got to figure out whether you want to approach it with the safe target. And if you're a rookie, if you're a beginner trader, I would highly recommend you approach it with the safest target. If you've been day trading for a while and you want to step it up to the advanced level and be a little bit more active, some of you might not even want to choose that option, but some of you might like it, right? So if you want to step it up, then you might want to use the maximum or the most optimal target based on the 1 hour wave theory, like in this example. It doesn't matter whether it's a pullback or a run, right? And the beauty, like I said, is in consistency. So whichever option you choose, just make sure to do it over and over and over again, because that is how consistency is made, right? And with consistency, with doing the same patterns over and over and over again, as you can see, it's pretty much fixed reward to risk ratio every single time, right? And because of that, sometimes you're going to have a loss and sometimes you're going to have a win, right? And the majority of the times, because of the strike rate of this approach, because of the safe targets, well, they're going to be hit a lot of the times. The same thing with the advanced approach. Well, sometimes you're going to be making more profit and sometimes you might be break even, right? So what you got to remember, that through consistency, you're going to let the probability play out of that approach, of that trading personality. There's a probability to it. And through consistency, through always doing the same action over and over and over again, you let that probability really play out. That's the day trader personality. It's simple, right? Doesn't have to be too complex. So to summarize, a day trader mainly focuses on the daily, 4 hour, the 1 hour time frame, executing on a 5 minute as an example, right? The weekly chart, the monthly chart is not necessarily required for a day trader. It's nice to have, right? But it's not required, because a day trader just needs to know where is this daily chart heading for the next day or 2 or 3, right? Short-term bias. And is this a pullback or is this a run on a daily chart? That's all we want to know. And then we approach it from a lower time frame point of view, where we actually break down the strategy and target the 1 hour wave. For an IBO, like in this case, it's a wave 3, right? And normal day trading personality is on pullbacks, utilizing safe targets, on runs, utilizing optimal or maximum targets, right? There's a benefit to that, like we discussed. An advanced day trader, every single time, right? Doesn't matter if it's a daily run or a daily pullback, they're always using the maximum or the optimal target for that 1 hour wave, right? That is it. That is it for the day trading personality. So I hope that makes sense. And obviously, if that's the personality that you choose personally, either the day trading one or the advanced day trading, make sure that, again, you're familiar. If you're trading our strategies, if you're trading masterclass strategies, make sure that you're familiar with the target placement levels. What's the safe target? What's the optimal target? What's the maximum target for the strategies that you will be trading? So if you're trading all strategies, the ABO, the IBO, the CBO, the ACB, every single one of those has its safe target, optimal target, and maximum target. That's what you need to know to really identify that trading personality even further, advanced or normal day trader, right? So that is it for the day trading personality. Now we're going to start heading into the next one, swing trader.